Welcome, everyone. Thank you for heads up. Okay, so today's topic is getting smart real estate investments and financing. So we're going to be focusing primarily on funding. What are the different sources that you can tap into and how you use them and whether or not you can qualify for them, okay? So let's dive into it. If you have any other questions, even if they're unrelated, please post them via the chat and we're going to address them tonight. So we're going to focus primarily on two exit strategies that require funding. That's fix and flip and buy and hold. Wholesaling does not require funding because you are not buying the property. You are just reassigning the rights of the contract, okay? So what are the different sources of funding and when do you use them? So let's go over into this chart that I created. So we're going to focus on fix and flip and buy and hold. Now, for those of you who are interested in building a rental portfolio, you're going to need to have a back-end financing, okay? And then for those of you who just want to do flips, then you only need to worry about the front end, okay? So now let's explain what the differences are, okay? And why you have two sources, right? Front end and back end when it comes to funding. What we mean by this is the front end is acquisition, right? How do you buy the property in the first place? And the properties that we're going to be targeting for these exit strategies are going to be primarily distressed properties, off-market properties that have a big spread for the numbers to make sense, okay? We're going to talk about what numbers make sense when we cover the back end, okay? But to begin with, we're going to talk about the different sources. And then for the buy and hold, you will have to have a back-end funding, okay, or refinancing. So that's divided into two. We're going to cover the front end because that applies for both exit strategies. So what are the different sources to buy a property? Let's talk about them, the pros and the cons, okay? So number one, cash, right? The problem with that is that you won't be able to grow and build an empire in real estate because if you utilize all your cash, you're going to run out of it very quickly, okay? So you want to leverage from other people's money at this point. So cash is good when you're buying distressed properties, but it's not ideal to leverage from your own money 100% because you're putting all the eggs in one basket. So the second option is home equity line of credit. If you have equity in your primary residence, you can tap into it to get funding. So for instance, if you own, let's say, a condo that is worth $100,000 and you owe maybe 30, 40,000 on it, you can tap into the equity to pull out as much as 75% of the appraised value. So if the property appraises for 100,000, then you can take out up to 75,000. But if you owe, let's say, 40,000, so you have 35,000 in equity. Okay. So remember, HELOC, you're going to be able to tap into up to 75% loan to value. So again, let's make it simpler. It's free and clear. It's worth 100,000. You can take out up to 75,000. So that's a great way to get funding for your real estate exit strategies. HELOC. The second one is going to be pension plans, 401k pension plans. So you can take a loan and to yourself and pay interest to yourself. Okay. If it's a first-time home, obviously you're going to have even lower rates and better terms. But this is also a great way if you have pension plans for you to tap into. The next one will be 1031 exchange. That means that if you are selling a property and then you're going to receive net profits from it, you need to reinvest those properties in the next 6 months so that you don't pay any taxes to the government. So that's another way where you can tap into your net profit or net gain from an existing sale. Okay, 1031. The next one is going to be hard money lenders. Okay, so hard money lenders are institutions. It's expensive money, short term, again, for the front end part of it. Now, the problem with hard money lenders is that not only is this expensive money, but you need to have experience, okay? And then you need to have reserves for it, okay? Because hard money lenders are going to require skin on the game. So they want you to have 10 to 15% down payment in reserves. Not only that, they're going to be able to finance 100% of the rehab, but guess what? They won't give you the money up front. You're going to need to take draws. So you're going to need to finance some of the upfront costs for the rehab. And then once the project completes certain milestones, then you can request a draw. Okay, so you're going to need to have resources available to use hard money lenders. Again, these are institutions, and typically you're going to get, this is the down payment. You're going to need to pay 12% interest rate. It's about a 6-month term and 2 points, okay, up front. And then you have the private money lenders. Private money lenders, okay, those are individuals that you know that can lend you money. So this is a great resource. However, it's relationship based. So it's who you know. If you don't know somebody who's got enough money to lend you, then you won't be able to utilize these lenders. And not only that, but there are certain lenders that will only lend to certain people. So not only do they need to know you, you need to have experience, some reserves, and you may need to be, let's say, part of Mastery, right? Andrew's group, for you to get funding. So if you're not part of Mastery, if you don't have any reserves, then it's going to be very hard for you even to get private money lending, okay? Another way to tap into some resources for down payments is line of credits and business credit cards, okay? So let's quickly talk about that. Business credit cards, okay? Business credit cards are given to your entity, okay? That's a great way for you to tap into funding for down payments. And not only that, but you can also use them to pay for materials. So business credit cards are a great way. And guess what? The cool thing about this is that it doesn't affect your FICO score. So apply, if you don't have the name of the banks that you need to apply for, let us know. And then we're gonna give you the bank account, the bank names that you can apply for business credit cards. So we started off with 7 of them when we applied through a third-party company. We ended up with about 40,000 in credit. Today we have close to 200,000 in business credit. So we leverage from business credit cards a lot. The next option is, I'm gonna put it right here, line of credit. Okay, line of credit. Line of credit, you're gonna go to lenders, primarily hard money lenders, okay? And they're gonna look at your liquidity. So based on your liquidity, they're going to give you a line of credit. So it's like a humongous credit card. So they're gonna check your credit, experience, liquidity, meaning your bank statements, pension plans, and based on your liquidity, they're gonna multiply that times 3 or 5. So if you have 50,000 in liquid assets, they may give you a line of credit for 150 or up to 250,000. Okay, so that's just another way for you to tap into other people's money, funding. Okay, so now which one is the best out of these, and when do you use it? So in my opinion, the best is and most flexible is the private money. Okay, so getting to know somebody, a private money lender that has decided to be passive in real estate, meaning they chose to lend money instead of buying real estate, is by far one of the best sources. Number one, they can give you 100% of the rehab upfront and 100% of the purchase price, okay? And the terms are negotiable, but for the most part, you're gonna be somewhere in the 9 to 12% interest rate, 6-month term, and about 2 points, okay? But again, it's more flexible, it's relationship-based, but you do need to have some experience, and not only that, but you need to present the deal in such a way to mitigate the risk. Meaning, you are gonna need to present comps, scope of work, super important, and analysis for your exit strategies, either if it's a flip or a buy and hold, okay? So these are the main sources of funding when you want to buy a distressed property, okay? Now, let's talk about the back-end financing. When do you use that? So if you're gonna fix and flip the property, you can use any of these sources. When you sell the property, obviously you're gonna pay them off. So you don't need to worry about the back end. However, if you're gonna buy and hold the property as a rental, guess what? You're going to need to pay them off. So if you took a loan from a hard money lender or a private money lender, then you're gonna need to pay that off. To be able to do that, once you fix the property and rented the property, then you're going to refinance. And then you have two options. You can use a residential program or a commercial program, okay? Now, the main difference is that the requirements for the residential are more strict. That means that you're gonna need to have a W-2, 1098, you're gonna need to have 2 years of taxes, you're gonna need to have some reserves, okay? And obviously your FICO score will make a difference as to the terms or interest rates that you get. However, the benefit is if you qualify with all these requirements, then you're gonna get the lowest interest rate. So you're gonna be looking somewhere in the low 3% interest rate, 30-year amortization, okay, which is amazing, right? Now, commercial, what's the main difference? Commercial, they don't need W-2 or 1098, okay? They don't need these. They're gonna need your taxes, some reserves. FICO is going to determine your terms as well, but they're gonna be primarily looking into the equity of the property. So they want you to have 25% equity on the deal. So example, if you buy the property for 100,000, you put in 50,000 for the rehab, the property should appraise for 50,000, okay? If you meet this requirement, then they are going to give you a commercial loan, long-term, so it's 20 to 30-year amortization, and the interest rate is going to be somewhere in the 5%, 5.5% or so, okay? The cool thing about this program is that it does not go into your personal credit report, okay? And the advantage of going with the commercial route is that you can have unlimited number of commercial loans, okay? However, if you go the residential, there's a limit. You can have up to 10. So 10 residential loans, 10 rentals with a residential loan, and that's about it. So that's gonna limit your growth. So eventually you're gonna need to go the commercial route. So my suggestion is, if it's a big loan, over 200,000, that you go the residential route, because having a very low interest rate is going to save you a lot of money. Of course, that's if you qualify for it, okay? But if not, you will just stay in the commercial program, which again, it's also very good. You just need to make sure that you have enough back-end value on your property. Okay. So that is the main difference between residential and commercial. I just wanted to show you that on the screen. Now, are there any questions so far of what we covered? Okay, so can you have both loans at the same time? Which both loans are you referring to? The residential, the commercial? So like, for instance, we have several residential and we have mostly commercial loans, okay? So the cool thing is that when you go the commercial route, it's not going to affect your debt to income ratio, okay? Because if you go the residential, guess what? All your mortgages are going to show in your personal credit. Okay, so that is something very important to keep in mind. Another question, what kind of equity do you need to have in the property for back-end financial? Okay, so you're gonna need to have, like in the example that I gave you, 25%. So 100% is the purchase price, 50,000 is the rehab. It should appraise for about 200,000. So they're gonna need you to have at least 25% equity on the property that you want to refinance. And then you're gonna get about 5.5 interest rate. So I love commercial because it's super fast. So let me tell you, what we've done lately is that we've used Harmony Lender, okay, and that's just on the upfront purchase. Once we stabilize the property, meaning that we rehab it, we rented the property, they can offer you a commercial loan. So they can just turn that rehab loan into a rental loan. So you stay within the Harmony Lender, okay? So they've got all your documentation. You don't need to go to a different bank. And the closing could happen in as quick as a week, okay? So you just tell them the property's been rented, you're gonna provide a copy of the lease, and in about a week's time, boom, they can turn that loan into a rental loan. So of course, they're gonna need to refinance, pay that off, the first one, and then give you a new long-term, lower interest rate loan. So it's super, super easy. And now most of the Harmony lenders are starting to give commercial loans. And the reason why is because they realized they were missing a big piece of the pie. You're their customer only for 6 months, and boom, they lose you for life. They said, well, what if I could capture that customer for life? We're gonna give them the upfront money for the rehab. Once they stabilize the property and rent it, then we're gonna give them the commercial loan so that we collect interest not only for 6 months, but for 20, 30 years. Does that make sense? So it's super easy and streamlined when you work with Harmony lenders, because not only do they give you the upfront purchase money up to 90% of the purchase price and 100% of the rehab, but they can also turn your rehab loan into a rental loan using a commercial program. So your interest rate is going to go from 12% down to 5.5 or so, okay? And then the amortization will be 20 up to 30 years. And okay, so the equity, yeah, we talked about the equity. So the equity is 25%, okay? So what it means is when you buy a property, you need to add about $100,000 if it's in the $100,000 range, and that should be your expected appraisal value. So if you buy it for, let's say, 120, that property should appraise somewhere in the 200,000, and then the rehab should be obviously less than 50,000, so that you always think with the end in mind, right? That you're gonna refinance, so you're gonna need to have equity. And even if you do a flip, it doesn't matter. You always need to think on the back end. How much equity should I end up after I buy the property and rehab it? It should be at least 25%. When you meet that criteria, your funding ratios are going to work really, really well. Now, about funding ratios, Harmony lenders are going to be looking at one ratio called the debt coverage ratio, okay? So what it means is they want to make sure that once you collect the rent and pay off all the operating expenses, such as taxes, insurance, utilities, HOAs, maintenance, property management, all the operating expenses to run the property, then you end up with your net operating income, okay? That is sufficient to pay the mortgage payment. Not only that, but that you have at least a 20 to 25% surplus in reserves. Let me give an example. So for instance, your rent is 2,000, okay? And then your operating expenses are 500, okay? So you end up with 1,500. but your mortgage is about $1,000. So you end up with a $500 surplus, right? So they want you to have at least 200 or 10 to 20% excess. So they're going to be looking at a ratio of 1.2 or higher. Okay, so that is computed with the net operating income divided by the debt service. Okay, so the debt service is the principal and interest. Okay, but again, when you have a spreading off between 80 to 100,000 between the purchase price to the ARV and the rehab is less than 50, you are going to end up with a back-end equity of at least 25 to 30%, and that will, by default, give you the ratio they're looking for, a debt coverage ratio of 1.2 or higher, okay? So that is super, super critical. Now, are there any other questions on the line? So we have Dr. Saed on the line. So thank you for joining, Dr. Saed. Dr. Saed is a private money lender, okay? So
hello, Hugo. How are
I
you?
would like to bring you on the line, Dr. Saed, if that's okay with you.
Yes, absolutely.
Just to
Good
tell
evening,
us
Hugo.
more
Can you hear
about
me?
your requirements to lend to someone who is interested in buying a property. What is it that you're looking for? What is it that is going to mitigate your risks when it comes to funding their transaction?
Yeah, Hugo, can you hear me?
Yeah, we can hear you very well.
Okay. I think you can see me also probably.
Yeah, we see
So,
you.
so the thing is, in my situation as a private money lender, basically, there are two things that we are focusing on. One is my relationship with the borrower, and the other thing is the property that the borrower is bringing to the table. And in that situation, with reference to the loan coming out, typically we fund both the purchase price as well as the rehab cost, 100%. The time it takes is anywhere from about 1 to 2 weeks, provided we have all the documents and all the information available. So the more the borrower can provide to me the information, typically the information pertaining to the good rehab figures, the numbers should really be correct, So it has to be a win-win situation, like you pointed out. The exit strategy, it has to be at least 75%, that they should be able to refinance to be able to pay somebody like myself back, you see. And so what we're looking at is basically the Plateau survey. We're looking at the information about the rehab figures, the Freedom of Information Act, anything regarding the village inspections or anything like that, they owe the village for, things like that. And then, of course, the commitment for title insurance is needed. Then we also need the home insurance. So all of these documents, all of this information we need upfront at the time of initiation of the loan. Typically, it's 2 points at the time of loan origination. And then typically it takes about, the loan is typically anywhere from about 4 to 6 months. Either it could be a flip or it could be a cash flow or a rental loan. And then the only other thing is the percentage is the same as you mentioned about the hard money lenders, it's 12%. So that's basically in a nutshell, what our system is about with the private money lender. I typically lend out to folks who are in mastery, because that's an organization that I belong to. And Andrew and Rahul have been my gurus. So that's basically, in that way, we have more of a sort of a security blanket. We know who the borrowers are rather well, that type of thing. I hope I've answered your question.
Absolutely, Dr. Said. Friends on the line, are there any questions that you want to ask Dr. Said?
I also wanted to let you know, Hugo, that I'm very privileged to join your cash flow group, that you have created. So I've become a member of that. I'm looking forward to a lot of camaraderie and getting to know a lot of other people and being able to, learn a lot, as I always do from your seminars.
Thank you very much, Dr. Said. I greatly appreciate it.
Thank you.
Okay, friends, so let's just quickly summarize what we talked about and what Dr. Said mentioned. Oh, there's a question, Mary. But for those that are not in Mastery members, will you lend to them? Okay, that's a question for Dr. Said.
Yeah, so typically I have some reservations about that for myself. There might be other private money lenders who might be willing to lend to people who are not in Mastery. The major reason is because I have a sufficient amount of people who are Mastery members who are needing private money lending and funding. So consequently, if I lend outside of Mastery, it becomes a little difficult for me to commit myself to lending to individuals. And subsequently, if somebody who's within Mastery comes to me for borrowing and I don't have the funds, then that becomes a problem that I'm turning them away. So it is for those reasons that I try to limit myself to those who are involved with the group, the Mastery group of Andrew and Rahul, Andrew Holmes, I mean, and Mr. Rahul Visal.
Thank you, Dr. Said. Great question. So there's another question. We are in the cash flow. Perfect. So let's talk about the cash flow very quickly. And then we're going to talk about the list of requirements that you need. But in a nutshell, I'm going to tell you what the requirements are to get funded. Primarily, you need to have, if you're going to be working with private money lenders, is a relationship. You have to have good relationship. And in many occasions, you've got to belong to a group. Like in this case, Mastery. Like Dr. Said belongs to Mastery. His funds are available to Mastery students. Now, the problem is, what if you don't belong to that group, right? But you still have a great deal. So we have solved that problem for you. So I'm going to tell you, I'm going to share my screen, what we have for you. Okay. So we created the cash flow inner circle. Let me pull it up on the screen. One of the game-changing aspects of this group and benefits is that whether or not you belong to a mastery group or not, we have raised capital to lend for your deals, okay? And these are the requirements, okay? So they are pretty much the same as private money lending, okay? So they're gonna be 12% interest rate, 2 points origination, and a 6-month term, okay? Now, how much are we gonna lend? So the loan amount on the purchase price is going to be up to $150,000, okay? And the rehab loan is going to be up to $50,000, okay? But this is the trick. If your rehab is going to be less than $20,000, then we're gonna give you 100% of the purchase price and 100% of the rehab, okay? However, if the rehab is over 20,000, we're gonna give you 100% of the rehab up to 50,000, but only 90% of the purchase price. Okay, so let me give you an example. If you have a property that is the purchase price is 100,000, but the rehab is 50,000. Okay, so we're gonna give you the 50,000 for the rehab, but only 90% of the purchase, or 90,000, meaning 140,000 to purchase the property. Does that make sense? So we are gonna vet the deal and we're gonna present the deal in such a way that is going to get funded. Okay, that's gonna be the key. And that's what Dr. Said brought up earlier. You have to provide comps, you need to provide the flip or buy and hold exit strategies. You're gonna need to provide a scope of work, okay? So I'm going to show you an example of how we present the deal to get it funded in just a second.
Hugo,
but these are the terms. What is it that you need as a new investor to tap into these resources? Like if you're a brand new individual, right, and you want to buy a property and leverage from these funding, obviously you need to belong to the cash flow inner circle. But most importantly, what I highly recommend is that you work with a great GC, okay? Why? Because we're going to need to have an itemized scope of work from the GC, okay? Because if you come up with a scope of work, it's not as reliable as if we get it from a GC, right? General contractor. So we're going to need to ask you to work and hire a GC to create a scope of work for you, okay? That's going to be requirement number one. And then you're going to need to have some reserves to pay the interest on the loan for the next 6 months, because we're giving you 100% of the purchase
tomorrow,
and 100% of the rehab. However, you still need to pay the interest, because these are interest-only loans every single month for the next 3 to 6 months. So you're going to need to have, assuming that the loan is for 120,000, right? You're going to need to pay about 1,200
we have appraisal
a month. So how much will you need to have in reserves? Multiply 1,200 times 6.
How about with no raining?
So that's about 72,000. So give and take, you're going to need to have about 10,000 in reserves, even if we give you 100% of the purchase and 100% of the rehab, right? So you always need to have reserves. Okay, so we're going to ask you primarily for two things when you become part of the cash flow circle. We're going to ask you for an itemized scope of work and for reserves for the next 6 months, because we want to make sure that you are able to pay the interest on the loan, okay? Let me see.
I can't hear you, Hugo.
Thank you. Okay, so let's just repeat what I said just to make sure that the background noise, now it's better. Okay, perfect. So we're going to give you, when you belong to the cash flow inner circle, access to funding, 100% of the purchase and 100% of the rehab. The only thing is the rehab is over 20,000, which over 95% of the times your rehab is going to be over 20,000. I can guarantee that. We out of over 30 deals that we've done, buy and hold, only I would say 2 properties were less than 20,000 when it comes to the rehab. So over 95% of your transactions are going to exceed 20,000 in rehab. So therefore, you need to plan to have 10% down payment for the purchase. You need to target properties that are somewhere in the 100, 130,000, 150,000. So you need to have at least 10 to 15,000 just for the down payment plus the reserves. So you're going to be looking at having at least 20 to 25,000 just in reserves. Okay, we're going to give you the remaining for the purchase and obviously for the rehab. We're going to give you the money for the rehab upfront at closing, which is good, right? But again, that's where the business credit cards come into place. You want to use business credit cards when buying materials. Okay, you don't want to use cash all the time. So you want to save the cash for unexpected items that arise in the rehab, right? So again, I need you to focus on 2 things: working with a reliable GC, general contractor, okay, who you can take out and with you and give you an accurate scope of work that is itemized. That's going to be critical, because guess what? We can help you with the rest. We can pull the comps, okay? We can do the flip and rental exit strategy for you, okay? Obviously, you need to provide the itemized scope of work, okay? Because we have limited GC resources to provide to everyone. We are making a list of about 7 to 8 GCs available to you so that you can reach out to them, call them, build rapport with them. So again, now at this point, you no longer need to build rapport with private money lenders, right? Because that might be challenging, time consuming. Now what I'm asking you is the next step up. work with a reliable GC, okay? Because guess what? Working with GCs, it's one of the biggest nightmares for real estate investors, okay? They can make you or break you. They can delay your project. You can go over budget. So it is super critical for you to work with reliable contractors. So in fact, one of the assignments for the Cash Flow Inner Circle members is to go to the village where they live and go to the building department and request a list of all the registered GCs in that particular neighborhood or area where they live, okay? Call them, get in touch with them, build rapport with them, because that's gonna be so critical. Because guess what? We're gonna give you the rest of the preferred partners. When you get into real estate, you're gonna need to have at least 10, 15 people in your team, but we're gonna give you all the resources from attorneys to inspectors to tax appeal, and so forth, okay? But the one thing that we cannot say, use this individual, is the GC. Why? Because certain GCs work in different areas, okay? And right now, with the shortage of inventory, even the bad ones are so busy, right? So we wanna make sure that you are working with at least a couple of them, one or two that are reliable. And always, obviously, make sure that they do good quality work, on time, and not expensive, okay? So let me tell you what the Cash Flow Inner Circle is. So the Cash Flow Inner Circle, what we do is we meet on a weekly basis, once a week, and we do mentoring calls, we do deal reviews, and these are our mentors, you know, Andrew Holmes, Rahul, Dan Carlton, Frank Montreux, Joe Mueller, Gary Davidson from Castle Law. What we're going to do is we walk you through a 10-module A through Z blueprint, okay, from essentials. Right now, we started about 2 weeks ago, so we're still in the essentials module, okay, building your team, building your entity. And then we move on to the area selection, finding deals, deal analysis, contracts, funding, closing the deal, rehab, property management, and building an empire, right? So how do you recycle money, having this exit strategy of leaving 25% equity on every single property and leveraging from other people's money. So that's what the last module is all about, to building and growing exponentially. Okay, so that's what the Cash Flow Inner Circle team is all about, is to give you a step-by-step process and training as to how you can build a rental empire. And we focus primarily on rentals, but it also applies if you're gonna do fix and flip, okay? Now, are there any questions so far?
Hugo, can I say a word?
Yes, of course, Dr. Said.
Okay, so there was a question actually that was posed by a gentleman, Sam Tusi. He said, is your loan equity-based or credit-driven? That was the question. In other words, the lending that I do, is it equity-based or credit-driven? What I'm assuming is what he is talking about is, do I look at the credit scores and do I look at the ability of an individual's financial status as opposed to the value in the property and the value in the project that he's bringing? And my answer to that is, yes, we do fund 100% for the purchase price as well as the rehab cost of the particular project. But at the same time, we do want our borrowers to have something in reserve. It's not like we are expecting, it's not like we are lending them 90% as opposed to a hard money lender. But at the same time, there can always be need for some cushion during the project itself. Secondly, we always want our borrowers to be somewhat I should say, definitely financially stable enough to be able to carry through the project, to be having some side income, just in case of problems that might arise. So that would be the answer to that particular question. Thank you so much.
Dr. Said, how much reserves are you looking for from a borrower?
So I think that let's say about if there's a property that let's say if the purchase price is 50,000, and let's say the rehab is about 30,000 or 40,000, and if the ARV is going to be about 140,000, So then I'll be giving them a loan of, let's say, 90,000. But if later on, if there's a problem in terms of some issues that might arise, they have rehab, I would want them to have at least a 10 to 15,000 cushion on the side. Not that it would be usable, but at least they should be able to bring to bear, you know. So it's I hope that answers your question. It have some kind of flexibility, because otherwise then there is more pressure put on a private money lender to come up with more money as the project is continuing, you see. And it's really not going to go through for refinancing, because they would need more money down the road. So the figures really have to be very good, very correct, accurate, as well as having at least a 10, 15,000 on the, at least that they should be able to pull, you know, into the project if needed later on, you know. So that maybe, so a good answer would be at least about a 10% would be a good amount, good, you know, 5 to 10%, I would say.
Thank you, sir.
Thank you, Dr. Sayed. So in other words, you always need to have reserves primarily to pay the interest only, okay? So as I said, about 10,000 minimum reserves, it's very critical. So it's asset-based. So hard money lenders and private money lenders are asset-based or equity-based. So we're focusing on the deal itself. The credit does not really matter as much as your reserve. So you could have a 550 FICO score. That does not matter on the front end, but it's going to matter on the back end. Okay, your credit is going to matter even if you do a commercial loan when it comes to the interest rate. Okay, the higher your FICO, if you're over 720, you're going to get the best rates. Okay, but again, commercial is going to be also equity based, and then residential, they also want you to have the 20% equity, but they're just going to ask you a lot more requirements when it comes to your employment, taxes, and reserves. Okay. Are there any other questions on the line? Okay, so absolutely, Alice. I know some of you want to join the Cash Flow Inner Circle, so I'm going to send you the link for you to join, and then we send you the profiling form. So please make sure that you fill this out, this profiling form, because guess what? Let me show you right here. Let me pull up the portal. Right here. So this is the current Cash Flow Inner Circle roster. So we have over 60 people, close to 70 people right now as part of the Cash Flow Inner Circle. So when you fill out the profiling form, we're going to ask you what your goals are, what's stopping you from being more successful, and many more questions. Also, your areas of interest for investing. So we're going to group you in teams that make sense, right? You're going to have a team lead that it's going to serve as your, I would say, accountability partner. Okay, they're not going to babysit you. Okay, because I'm going to be in charge. Anything that you need, you can obviously reach out to me directly. But this is what the team looks like right now. So it's super, super exciting. So this is, in fact, what I'm showing you, it's a portal that you'll have access to. So every lesson, so we are in essentials right now. So every lesson has sections, subsections. So like, for instance, module 1 is essentials for success. So setting up yourself with the right mindset, right? So you're going to have a video under every section. And my objective was to create very short, concise videos, okay, that they are less than 10 minutes, okay? So I'm summarizing, simplifying everything for you to learn very, very quickly, but I'm covering all the basics. So we've spent about 2 weeks already setting up your team because it's so critical. Even we show you how to hire virtual assistants, okay? So it's really cool, very, I'm super excited about this. Next week, we're going to start talking about area selection, okay? So we're going to show you where the top rental and flipping markets are, how to identify, and obviously, we're going to continue with the modules for you to build a rental empire. So we're giving you step by step, including the resources. Under each module, you're going to find actionable steps, and not only that, but resources that you can download under each of the modules. Now, something that I mentioned earlier that I wanted to show you, like for instance, setting up your entity, we have a handout, okay? We give you more details on setting up your entity. We're going to be talking about insurance, many topics that you're going to need, okay? So something that I want to show you is when you become part of the cash flow inner circle, we're going to help you prepare your deal to get it funded. So I'm going to go over to we have two groups, the cash flow and the wholesale. So I'm going to go over the wholesale portal, because in here we have a couple of success stories already in the last month. So what I want to show you is how we present the deal to get it funded. Okay, so this is David Myers. We wholesale a property this week, by the way. So we presented a certificate to David Myers. So I'm going to maximize this screen so you can see how we present the deal to get it funded. Okay, so this is the property. Let me see if I can make this a little bit bigger. Okay, right here. Okay, that's a little bit bigger. So this property in Austin, so we provide the comps. Okay, we have all the pictures, layout. We also have the exit strategy for a flip and for a rental right here. So all the numbers. And most importantly, itemized scope of work. Okay. So this is exactly what the private money lenders are going to require for funding. So when you find a great deal, we're going to help you put this document together, because even when we fund the transaction for you, we're going to need to have this in place. So the scope of work, that is why I was asking you to focus on working with a reliable GC. Okay, that's super critical, and we can help you do the rest. We can help you do the flip and rental exit strategy analysis, okay, and pull the comps, and obviously the pictures. We even do a 3D virtual tour, okay, of the property, so that you can see and walk the property from the comfort of your home. This is another property that we wholesale, in fact, like in a couple of hours, okay? But the reason why is because of the way we presented the material for the end buyer to get it funded. Okay, so let me show you. It's similar. This property was in Allsip. So right here. Okay, so this property, so this is the type of document that we're going to help you create as part of the cash flow inner circle. So this is the property in Allsip, the description of the property, the comps, flip and rental exit strategy. So we back up the ARV with some comps that we pull. We show them side by side, and some pictures, and finally we're going to provide the scope of work itemized right here. So the scope of work, again, is itemized, so super critical. This is how we present deals to get it funded. So when we fund your deal, we're going to ask you for the itemized scope of work, and we can help you with the numbers to make sure that it makes sense, okay? So again, that's what the portal looks like, and so please make sure that you fill the profiling form. Now to join, you have two options: to go on a month-to-month, no commitment, $59 a month, or if you want to commit for 6 months, you get 20% off, so $287. When we came up with the pricing for these cash flow inner circle members, we did not have the funding available. Had we had the funding available, then this would this would have been at least twice as much, okay? But for now, we're gonna keep it as is. We just wanna make sure that we help you become more successful with our training, resources, and now funding. Are there any questions on the line so far? Alice, absolutely, you can still join. Are there any other questions on the line? Hey, Shirley, I know I see you are on the line. Would you like to share any words with the group? Okay. Anybody else? Any other questions that you may have?
Hey, Hugo,
Okay,
I got a quick question.
Yeah, go ahead.
Yeah, I kind of typed in my question earlier. I just wanted to know, do you have access to the DealVault if you're part of the inner circle?
You don't have to have access, but it is highly recommended. Okay, so when you become part of the inner circle, it's separate from DealVault. Okay, we're going to be obviously referencing DealVault quite a lot because DealVault automates everything. In fact, the reports that I was just showing you are generated from DealVault. Okay, so it's going to be important to have access to DealVault.
Got it. Thank you.
No problem. And something that we're going to do starting this week, friends, it's super cool. I've been meeting with some of you face-to-face at a coffee place. That's been so successful. So what we're doing this Friday, for all the Inner Circle members, we're going out for coffee in Schaumburg. I reserved 2 rooms, okay? It's a place by Coffee House on Gulf and Wholesale. And it's going to be so cool, obviously with the distancing for those of you who feel comfortable. So that is an opportunity for us to get to know each other at a personal level, for us to network and partner up in deals, and obviously for me to understand how I can help you become more successful. So I'm so much looking forward to this Coffee with Hugo this Friday between 11:30 to 1:30. So you can show up anytime. It's going to be so cool. I'm super, super excited. So you must have received a text message and an email today if you obviously are part of the inner circle. So I'm super, super excited to meet many of you in person. Are there any other questions on the line? Or do you need anything that you're stuck with, any resources that we can help you with?
Hugo, I have a question. The deals that you are sending us individually, are those already vetted from your group, by your group, or do they still need to be?
Yes, they're vetted. So great question. So this is how we're doing it, and this is becoming extremely, extremely powerful. Oh, Shirley, thank you for joining. So Shirley, let me just answer the question. So we're sending you vetted deals. So what we're doing is when you become part of the cash flow inner circle, then we're going to send those deals, if you're interested, to the wholesale inner circle for them to try to get them on the contract. So that is super, super powerful. In fact, if I share my screen, let me show you how it looks like. So I'm going to log on to the wholesale inner circle. And then we have already some cash flow inner circle members who are interested in some of the off-market leads that we send them out. So in here, if I go to the lead generation module right here, so cold calling leads for you to get on the contract. So we have a couple of them that we have given to the wholesale inner circle members We give them all the information about the property, how much they need to get it on the contract, the contact information of the owner, all the details. Because guess what? When they get these properties on the contract, we already have the cash flow inner circle member who is ready to buy the property. And guess what? We can fund the transaction. So we're giving the instructions to the wholesale inner circle members to get these deals on the contract. So when we send you a vetted deal that most likely is a high equity pre-foreclosure, just reply and say, I'm interested in this deal. So you don't need to get it on the contract. We're going to delegate that to the wholesale team for them to get it on the contract, because that's what we train them to become really good at, acquiring properties. Okay, so the wholesale inner circle member, team, it's quite large now. It's over 50, 60 people, so I can show you the roster. So you're going to have a lot of resources that you can leverage. Look, the wholesale inner circle, actually it's over 70 people, okay, that are actively getting properties on the contract. Okay, so like so far we started not too long ago, about a month ago or so, we already wholesale 2 properties. Okay, so it's extremely powerful. So if there's a deal that we send your way, you don't need to worry or get it on the contract. We're going to have the acquisition specialist, this team, get it on the contract for you, and then it comes back directly to you. So it's extremely powerful. We are getting these off-market deals from the wholesale inner circle group under contract, and then the cash flow inner circle members have a first-hand look at the deals before we market those deals out to the entire group. So in fact, the 2 properties that we already wholesale ended up in the laps of cash flow inner circle members. So it's all within the family. We're just trying to synergize and take advantage of everyone's skill sets to complement each other. Okay, so the wholesalers are really good at building rapport, talking to sellers, and the cash flow inner circle members are more into building or rental empire or doing fix and flips. So I hope I answered your question. Shirley, thank you for joining.
Hi, Hugo. Yeah, sorry, I was earlier I was on the phone, so couldn't unmute. So.
Okay, thank you. So Shirley is also part of the cash flow. It's a partner of ours. So thank you for joining. Would you like to share some words with the cash flow inner circle members, and how exciting this project is to get their deals funded?
Yeah, this is great program, and especially working with the the wholesale inner circle. So like Hugo mentioned, the deals are vetted, and I will be excited, help to fund your project as long as the deal makes sense. And also, as Hugo mentioned, so at the beginning, I just want to clarify at the beginning, right, for inexperienced rehabber, we ask for the 20, we put the cap 20,000 rehab fund plus the full purchase. But once you are experienced, you demonstrated you can complete the project, we actually okay to fund all the rehab. So, as you grow, we can fund more. So, so this is great program. I really look forward to partner with all of you on your investment journey.
Perfect. Thank you very much, Shirley, for joining us today. So she's one of our partners. So thank you for joining today. Shirley, she's a great addition to the team, as well as Dr. Syed.
Thank you.
There's a question on the line. Is it possible to fund an off-market deal with traditional financing? Absolutely, so long it's in great condition. Let me give an example. Check out this property that I'm pulling up on the screen. This property, it's beautiful. It's in Wrightwood. We're trying to get this property with a cash for keys agreement, because guess what? This is an off-market property. It's a bank-owned REO. We could buy it directly from the bank for $190,000. This property is worth $290,000. So there's $100,000 spread, and guess what? The rehab is less than 15,000. This is like, I was telling you, like less than 2% of the properties that you're going to end up with are going to be like this one. However, it's occupied. So we have sent no less than 5 of our best wholesale inner circle members to try to get a cash for keys agreement. So we're willing to pay up to 10,000 to the occupants in exchange for the keys, and obviously access to the property in the next 45 days. So far, we're still working on it, but yeah, when the property is in such a nice condition, absolutely you can fund the transaction through conventional lenders, so like the Chase, the Bank of America, because those bigger banks are going to be looking for a livable property, and where the utilities are on, so they can fund these type of transactions. But over 95% of the properties are not going to be like this one, okay? Therefore, you're going to need to use either hard money lenders, private money lenders, or our funding from CASHFLOW Inner Circle. So great question, Dwayne. Any other questions? Anybody on the line?
Hugo, I had a quick question. This is Sayed
Yes.
here. The roster that you have for the cash flow, can you just clarify to me how does that roster work? In other words, I saw the vertical, if you can just
Yeah, let me
for
pull
a
it up.
second show that cash flow roster. The cash flow
Yes, so
inner
let me
circle, I
go
mean,
to the cash flow roster.
inner circle. So how does that, if you can just briefly just give me an idea about how that works.
Okay. So right here, so this is the cash flow inner circle roster. So the way it works is when people fill out the profiling form, let me show you the profiling form. So we're going to get your contact information, just first name, last name, and so forth. Then we're going to ask you whether you're a broker, describe your experience, the coverage, right? What counties are you interested in investing, whether you're a private money lender, describe your goals in 2021, any roadblocks, and whether you're interested in becoming a team lead. So the team leads that we have right here are either master students or real estate brokers. So they have a lot more experience and they're willing to become accountability partners for the rest of the team. That's great. They're not responsible for the performance of the teammates within the group, but they do play a key role as far as becoming their go-to individual with any questions related to buy and hold, fix and flip. And obviously anybody can reach out to me directly. So they have access to my cell phone.
Understood. Thank you.
So that's how we group them based on their geographic location, goals, experience, and then we assign a team lead.
Thank you.
Oh, thank you. Great question, Dr. Said.
Hugo, did you want to talk about how to submit a property that might not be on the Chicago Deal Vault?
Okay, so the same, if it's a property that is not in Chicago DealVault, it's going to be the same protocol. So we're going to need to have a scope of work. That's what we want you to focus on. And we can help you with the number crunching so that you can buy it at the right price, okay? So we want to see that you have at least 25 to 30% equity on the back end once you rehab the property. Therefore, you need to buy it at the right price. So we can help you before you get it under contract, run the numbers for you, do the flip and rental analysis for you to make sure that it fits into the funding criteria. And obviously, one of the key components is the scope of work, okay? But even if you find the property that is not in Chicago DealVault, it's okay. We can still fund the transaction. Like one of the Russell Walker's wholesale deals, right, that came last week. One of them was a great property. It met the requirements, but they just flew off the shelf. So he had 3 that he wholesale. One of our members was interested in. When I called Russell, because Russell and I are very close friends, I said, hey, Russell, can you, we're interested in this property. He said, Hugo, I just sold the 3 of them. So, but again, it doesn't matter if it's not in our lead pipe. We can still fund the transactions so long they make sense. Okay, so great question. Thank you for bringing that up. Are there any other questions? So I'm super excited for those of you who are still not part of the Cash Flow Inner Circle to join. And if you're able to make it for the coffee with Hugo this Friday, that'll be even more amazing to meet you in person. So let's just quickly summarize in 1 minute what we talked about today. Okay, the different sources of funding, primarily the most important ones are hard money lenders and private money lenders, okay? And the difference between them is that one is relationship-based private money lenders, and that's about it. But if you don't have those relationships, it's okay. Once you belong to Cash Flow Inner Circle, we can fund your transaction so long the numbers make sense. So we're going to help you analyze the deals, do the number crunching. We want you to focus on getting to work with a great GC that can provide an itemized scope of work that is very accurate. So again, go to your village, to the building department, and request a list of all the registered GCs. Call them, build rapport, take them to see properties. Even perhaps if you need to pay them for the time, it's totally worth it. Okay, just it's your assignment, your homework. And I send you the link to become part of the Cash Flow Inner Circle. We meet every Sunday at 1 p.m. So I'm so much looking forward to making you more successful. And thank you very much, Dr. Saeed, Shirley, for being part of this great team. I greatly appreciate your support, your time, and your friendship.
Anytime. Thank you so much for having me over.
Hugo.
Thank you, Dr. Saeed. Thank you, Shirley.
Hugo.
Thank you.
Hugo, can I say something?
Of course.
I just want to commend you for a wonderful job. Keep doing what you're doing. You are a big inspiration.
Thank you, FT, very much. I greatly appreciate it. And I would love to meet you in person, if possible, right? If you feel comfortable. Somebody's asking for the location.
Yeah,
of course, let me look it up. It's Coffee Place by Coffee House. Forget the name. It's
Need,
Chambers.
K-N-E-E-D, 233 West Gulf.
Oh, it's right here. Perfect, thank you. So I'll send you this is the place. Need bakery and coffee. And I reserve the room. 2 rooms, in fact. It's really nice. I really like this place. So it's right there. And it's called right here. So it's going to be Friday, the 19th, anywhere between 9:30 a.m. to 1:30 p.m. So thank you everyone for joining. I'm going to remain on the line for the next 2 minutes in case you have any further questions. I'll be happy to answer them.